Hello and welcome to the Trading with Technical Indicators. My name is James Boyd. We welcome you here on this Monday, October 20th. I'm wearing my Trend 3 green shirt, which we wore twice last week. And it kind of sometimes does tend to show up when there's a divergence, a W pattern, high VIX and so on, or just the market trending or flagging in general. So we want to try to keep that good spirit going. So let's run it back. So we'd like to welcome all of you here today. JP, Kevin, Frank, Greg, Josh, Pink, China, Favors, 3047, and many others. Welcome to all. We also have Brent Morris in the chat. We welcome him. And quick update, there was a question regarding, was Jax a little cold at the college soccer game? If you didn't see this on my X page, he was kind of adorable, I got to admit. Just kind of looked, Dean was asking, was he a little cold? The answer was yes, he was wearing his little Superman cape. And if we go back to, I think, this previous one, yeah, he did bundle up on my daughter there. And it was a good time. But Dean, I think you're right. He probably was a little chilly, but we tried to keep him warm with a blanket and so on. You didn't see that post. It was kind of funny. Jax is with us in spirit here today. So just real quick as we get going, a little fun there. You can follow me and Brent on X. There's my handle. Brent will post his handle in X as well. We do post educational examples, also some fun content as well. And also remember, when we talk about the information here, it's provided for general informational purposes only. Should not be considered an individualized recommendation. They're examples. Options carry a high level of risk, not suitable for all investors. When we also talk about, let's say, the examples, we will do those in the Paper Money software application for educational purposes. Also remember, when we talk about past examples, there's no guarantee of future results or success. They're just a trade example of a potential outcome that some win, some don't. And so we try to kind of show the pluses and the minuses, and we'll show that here today. Also remember that investing involves risk, including loss of principal. Now, today what we want to discuss is just real quick. I want to kind of show prices first off, okay? Second, then we're going to talk about the indexes. Third, we're going to also, as we talk about the indexes, need to kind of follow through on what happened last Friday with the expiration. In the Paper Money IRA, I want to kind of show you a situation that happened that I saw probably about 15 minutes ago. We need to address that, because if we don't address that, then can't do any new trade examples here today, and that'd be so sad. We'll talk about some sectors, and then we're going to look at some individual examples as well. Do want to give us a quick reminder that about 2 weeks ago, a week ago, we did do an example of a bearish trade, 2 of them to be exact. We did one on Starbucks. We also did one on CSX. We will follow through on those here today as well and talk about those here. So let's go ahead and just hop right in for just a sec. I'm going to pull up this chart, and so one thing I just want to kind of verbally speak to just real quick, okay? We see gold today is up about 3.5%. We talked about that on Friday, kind of just saying how it was still pretty volatile. Gold trading at right around 43.67 or so. Silver lagging, okay? So gold's kind of about trading at 1% higher. We did see the Japanese stock market hit a new low. No, that's not true. That actually hit a brand new high. So if some of you have been watching the international markets, Japan actually did hit a brand new high. Now, let's kind of start this off with maybe how some of us like to start off by looking at the volatility. I think it was about a week ago, maybe 2 weeks ago, we kind of talked about when the volatility is high like this, how it tends to be mean reverting. Now, what you're now going to notice on when you take a look at the VIX, we said on Friday it was really abnormal to see the VIX go as high as it did. And then the stock market, equity markets, really did not go down that far on a percentage basis from high to low. Now remember, if you're a bullish investor, you love to see actually VIX falling down and or staying down. The VIX falling down or staying down is like going tubing or water skiing, whatever, on a lake that is like glass. There's not a lot of volatility, okay? Not a choppiness of the waves where it makes it harder, right? And so seeing the volatility actually go down. And this is why some people like to kind of do some selling strategies. That doesn't mean they're all going to work, but some of them might, okay? And so seeing this go from what? We were at 29 last actually week, and you're going to see that we kind of are sitting here about 18.5. Now, I want you to kind of notice something. When you take a look at, let's say, remember what we've been trying to do is talk about, let's say, things like callers and covered calls, things like that, to try to get us through the period of volatility. That volatility has not necessarily led to so much like hard selling per se on most things. It's led to consolidation. And so what you're now going to notice is the lower that the VIX goes, the greater the chance that if we had some stocks that chopped around, chop, they could be breaking out to the upside. That's what that means, okay? So the lower that the VIX goes, if you had some stocks that were in consolidation, you did callers, you did cover calls, things like that, you're biding some time trying to sell some premium to reduce the average cost, theoretically, the lower this goes, the greater the chance that the investor might say, I'm going to buy the callback, exit the protection, try to play the bull flag breakout. Now, let's kind of show what this, let's look at the SPX first. When you look at the SPX, let's sync those charts together. Okay, SPX, is it actually, now we spent some time on Friday kind of talking about the October 10th open price. We're back up near there. Okay, now if you kind of look at what's happened since then, you could say in the shorter term there's been a little double bottom action. Today, what do you see? Well, what we also see is that we're also trying to do a moving average crossover. So there's the open price. This is where the S&P needs to close above, get above, to kind of wipe up that red candle. Wipe up meaning it just reverses it. Now you're going to see that we had a higher low there. And now what you're going to notice is there's a crossover. I'll just kind of mark that with a line, getting a little push. We gapped up. The open price was the low of the day. That's not necessarily bearish when it does that. It's pretty strong if it can hold it. And if we actually close here, we wouldn't actually leave any upper shadow. Okay? Now, so the S&P, decent. Okay? Now, we want to kind of, now here's my question. What sectors are leading that charge? Now, we know immediately that it's probably not utilities. I want you to remember that if the market bounces back to the upside, you tend to see the lower beta, the income producing areas like utilities, staples, healthcare, non-biotech, some real estate, etc. They tend to actually kind of be more down a little bit. And the growth areas tend to come back. Like what? Tech, discretionaries, communications, right? Could actually have some industrials in there as well. Could actually also with that have some financials as well. Okay? I mean, those are the growth areas, right? Now, if we take a look at the NASDAQ, just real quick, fast fire, is this above really that October 10th high? Ding, 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 we have a winner. And all of a sudden here, you're now going to notice that if we can close there, man, a lot of those bearish investors who said, this is the market pullback, we're entering the bear market, sell everything. This is what they say. Every time the market pulls back, it doesn't matter if it's 1%, 2%, 3%, start of the bear market, my friend told me so. And then all of a sudden they look at the weekly chart and they're like, oh, crud. It's probably not a start of the bear market because we haven't even gone below the 30-period moving average. That's exactly right. Another winner there. Now, the biggest actually thing is when you look at, let's say, the Russell. Russell kind of got some volatility with it, but it stayed in the range. And the last one right here is Dow, which hasn't been that bad. Dow's actually done quite well. Dow is also really above the 10-10 open price. So what do you, and there's the crossover. So if you said which of the two indexes, of the four, we have two indexes, the NASDAQ and the Dow, that are above the open of October 10th. Okay? Now, we talked about it Friday, how the investor doesn't have to invest domestically. They can also look abroad as well. But to see the kind of the U.S. markets kind of come back in a little push here, and if you live in the U.S. and you invest in U.S. stocks, it's not a bad sign, okay? Now, let's kind of also pull up just real quick. Now, I also include the SOX. Now, obviously, if we saw the NASDAQ pushing up, you're thinking that something is pushing to the upside. Now, on this, what do you see here? What do you see? Okay? So when we look at the SOX, what you're now going to notice is that's a brand new high. That is also getting above the October 10th open price. We've had moving averages where they've been green the last couple of days, Christmas tree green to be exact. And you're also starting to almost see a crossover. Now, don't think that everything has to look like the industry group graph. There could be stocks that are leading that charge. Like what stocks? What stocks are leading the charge? We don't need to run a search, okay? We could actually go right to the Market Watch. We could go right to Visualize, and we could say, give us a immediate list of technology stocks or semiconductor stocks. If we go to, let's say, Market Watch, Visualize, click on the S&P 500, and we're just going to go to technology. And if I click on that, now we're going to see a list of semiconductors and semiconductor equipment. Now, again, the greener the lighter the green color, the stronger the upside move. Now, we can make these stocks an immediate watch list and say which one's strong on the weekly. Do they have any hold? Are any of them doing crossovers? Are the moving averages green? Are they showing breakouts? Are they showing strength to this industry group and or the S&P? All of the above. And there's a good chance that there's multiple setups on those stocks. Okay. Now here's the question, Willie, BJ, Nora, which one are you watching? That's the question. That's really, now a couple of you are saying, wait, come look over here. Hello. Okay. Apple. We'll come to that in just a second. But the biggest kind of takeaway so far is that we see a little push. Now, if you don't mind, I want to kind of just do some writing down of some notes just real quick. And what I want to do is on this is I would just kind of want to mark down, if we're talking about indexes, okay, we're going to write down the NDX. We're going to also write down the DJX. What is actually noteworthy is VIX, okay, VIX. You know, we're kind of seeing a big drop, okay. We went from 29 to 18, okay. And remember, we talked about kind of what does that mean? Well, if we're dropping down harder and harder and harder on the VIX, it probably means that the breakouts are happening or those crossovers are probably right now, which we've already seen in a couple. That's what's happening. Now, if we're talking about sectors, okay, I'm going to include the stocks here. And what you're now going to notice is when we're talking about stocks, if we say stocks, we're saying technology. If we say technology, we would say discretionaries. If we say discretionaries, we're probably going to include communications, okay? So there kind of has to be like a little thought process of really what you're doing. If the market's bullish, it's probably because these areas are leading. Now, quickly, when we come back to this list, like what is technology showing? Just like the NASDAQ. If I said, well, what is industrials doing? Kind of sideways. What is financials doing? If we're talking about the group, not as great on the group, okay? What you're going to notice on the transport, just real quick, a little snapback rally. The major piece that we would say out of the transports is we see transports, okay? You got crude at 56. Hello, okay? So could that lead some of the trucking companies, some of the airlines, could those push to the upside, okay? Now, I want to kind of say just real quick, is we getting a little push on staples? Are we getting a push on utilities? Little selling action, could be a flag, right? But below the moving averages. And the last one I'll just point up, what do you see on healthcare? Willie, what do you see on healthcare? Looks like me and you are going to be best friends today. Lawrence, what do you see on healthcare? Now, a lot of times if you said, James, this chart kind of confused me, kind of price goes up and down, it's green, red, green, red, green, red. Remember, go back to Heikin-Ashi. And if you go back to style, candle, Heikin-Ashi, you're going to notice that, remember, this is kind of like, you guys, when you went to college, okay, you would get a book and it was called Science for Dummies, okay? I like to think about like Heikin-Ashi is candlesticks for dummies. We're not calling anyone dummies. It's just kind of the brand, okay? Now, if you take a look at this, what you're now going to notice is, remember, the green candles, that is your pull, okay? The red candles, plural, there's your fleeg, okay? So there it is. What do you notice? Well, now we're starting to get a little turn, and we're starting to see a little bounce action in the healthcare space. Now what I'm going to do is write that down. Now let's do this just real quick, okay? So before we go to our first example, so we kind of talked about the indexes. We summed that up. We kind of were talking about, I think it was last week, we said, hey, be very careful. The higher that the VIX goes, people talk about the market crashing. Problem is you have statistically worse odds of actually expecting the market to fall down further because you've gone away from the mean reverting level. It's a mathematical formula, okay? And so after about a week, pretty much we're back down to 18. Now, the biggest sexy thing, and that's the worst thing, is you can't go back and say, I'd like to sell puts now. It's not how that works. It would be nice. We talked about the sectors that are kind of standing out. We'll come to the Dow in just a moment when we do our trade examples, okay? So I'm going to put Dow right here. Now, the one thing that we need to address, okay, when I pulled up this account today, I was like, wow, what happened here? So first off, what was last Friday? Answer, last Friday was expiration. Now wait, if you close your account out, let's say you were in the green or positive cash position, and now you're $70,000-ish in the hole, what does that probably tell you? Well, number one, you bought something, okay? Hence your cash went down. So we're going to be looking for any positions where there's 100 shares of something. Now, if I go down here, it's it could be Cisco, could be. If I go down to Cisco and I look at this and say on the expiration date, which was 10/18, was there any assignment? I don't see that. So first off, we're looking for the expiration date, 10/18. It would also be at 2,300 hours, okay? We don't see that. If I go look at, let's say, Netflix, and I click on Netflix and say, what do we got here? Netflix. Ah, there it is. I actually said 10/18. It was 10/17, excuse me. 2,300 hours. What is this? What is this? I want you to imagine this is real, okay? And all of a sudden, my gosh, I'm $70,000 in the hole. What happened? You got assigned. What does that even mean? You sold the put. The stock actually closes below the short put strike. And I'm talking about at expiration. And by the way, it can happen before expiration too. American style options. But in this case, it was at expiration. What happens? It means that the paid money account buys 100 shares of a $1,200 stock. Mama mia. Now, got a little lucky, didn't we? Okay. Now we must be living right. It doesn't always happen like that because sometimes we could be better. Okay. But what happened is the paid money account bought those shares at 1,200, was assigned. 1,200 was the old strike. What happens? The stock goes from the assignment at 1,200 up to 1,238.95. Hallelujah. And then all of a sudden the stock is up $39 and now we're a genius. Well, not so fast. What happened? This one kind of slipped through and we forgot to close it out. It was assigned. And now we always talk about if you get assigned the shares on a sold put, what could you do? Well, you could look to sell the position, all of it. You could look to sell some of it. You could look to cover call it. But in this case, we can't keep 100 shares. That's a whole entire portfolio. So if we were trying to kind of keep this down to where we could keep it, if we said, look, any position cannot be more than $8,500, this is a $1,239 stock. I got to sell 93 shares worth to get below. I can't have more than 7 shares. So now we always talk about, so how do you sell the shares? Well, same way you probably bought them. We're going to go back into just real quick on the Netflix. And what we're going to do in this case is we're going to right click on that line down below. We're going to go create closing order, sell. Now the default is 100. We don't have to sell 100. Now, we also want to kind of think about, well, what's the bid-ask spread like? Well, the bid-ask spread is 80 cents. It's a $1,200 stock. It's not penny wide right now. Volume is 2,143,000. So what we're trying to do is sell about 93 shares of stock. Okay? Now, again, I'm telling you this right now. Got a little lucky. Okay? This doesn't always pay off. The stock could have been down $39. So this is why we kind of always talk about, hey, if you don't want to have that risk, okay, you don't want assignment, close a position out prior to expiration. okay? In this case, one slipped through the floor, okay, underneath the door, so to say. We're going to sell the 93 shares. Why are we not selling 100? Well, because we're going to leave 7, and that would be the proper position size, okay? We're going to confirm and send. Let's go to mid, confirm, send. Note, there it is. Send the position, send the order. Now, what's going to happen if that trade fills? That should reverse the cash position. Now, guys and gals, this is very important, okay? Sometimes as traders or investors, we kind of do things to ourselves, and we need to kind of emotionally, logically walk through it, okay? So the comment was, if a position grows to over 5% of your portfolio, do you sell some? Well, the way we started this portfolio is we said, look, any position could be maybe 8%, no more than 10. And yes, it would be trimming some to stay below that threshold in the paper money portfolio, okay? Now, I don't want to get off this until I see that this really fills, okay? I'm going to go a little bit lower to try to get it filled, maybe 20 cents or so. Remember, that spread is about 50 cents wide. So if we're saying, hey, we're at 60, okay, our order is below the bid. What am I expecting? I'm expecting that order could fill at any moment. That price right there is below the bid. There it is, okay? So it actually, just because we had a limit price at 1239.60 something, it doesn't necessarily mean it filled at that. And now what you're going to see is it filled at 1239.89. Why is this important? Well, because in real life, if I didn't want to have a negative cash position, I need to get rid of the error, so to say, to reverse the cash. So I sold the shares of the stock. Now I got the cash. Now I'm kind of back to where I should have been. Got lucky. Okay. Can happen. Okay. But now we're kind of saying, okay, the portfolio is where it needs to be. Let's go. Any questions for that? Okay. Now let's kind of go back to, now there was a comment on, just real quick, Apple. And let's pull this up. So this class is on trading technical indicators. Okay. So what I'm going to do is I'm going to go to Market Watch. I'm going to go to Public, and we're going to pull up Dow Jones Industrials. Now you're kind of expecting, okay, that if the market is almost at a brand new high, the NASDAQ is, you're probably expecting that some of the trends we had seen, which were in trend 4, in trend 5, in trend 1, you're kind of expecting that we're probably getting a lot more trends in the what? Green color, okay? Now that trend, now remember, this also goes back, let's think back. How long were these trends in trend 4, 5, and 1? They did not really stay that long in that trend. Is that a bad sign? No, we wouldn't say that at all. Let's go back to just real quick this chart, which we pulled up, but let's pull it up just real quick for the SPX. And remember what we kind of been talking about is we've been saying that, hey, if we get these orange color candles, shallowest type of pullback. If we get the orange purple type of candles, like here, okay, shallower, okay, it's not shallowest. And then if we get a little orange, purple, red, ooh, that actually just means there was a deeper pullback. Now, the question is also, well, how long did you get the red candle for? Only one day. And then buyers started to come back in. How long was it a red candle? For one day. How long was it a red candle? For one day. Yes, it actually fell down below both moving averages, but we didn't really, if we talk about the pullbacks, the flags, see, the flags are those non-green candles. Non-green. So if we actually said, well, James, is this a flag? What did I just say? Non-green color candles. Yeah, there's your orange and purple, orange and green. Orange and purple. If we actually, is this a flag? Is that non-green? Ding, ding, ding. And then all of a sudden, is this a flag? Non-green, ding, ding, ding. Is this a flag? If it's non-green, okay, this one, yep. This one, yep. Those are all your higher lows on the chart. non-green. Those are your flags. The shorter duration of time that we're in that flag before we see green candles, okay, again, the stronger the momentum. The more that the investors are trying to ride that trend. Speaking of trend, let's actually pull up just real quick one of the names you actually mentioned, and let's take a quick peeky at Apple. Now, some of you are Samsung lovers. We love all people, okay? But let's go back to this chart for just a second. Now, everyone gets so like, oh, I got Samsung, Apple, my phone's the best. You know, I hate Apple, I hate Samsung. It's so funny how we get so passionate about what our phone is. All right, here we go. Now, what type of pattern do you see on the chart? What do you see? You see anything? Yeah, it kind of goes back. You got this old high, right? And then you kind of got this little consolidation, then it runs back up. I don't know about you, but when we see that, we're kind of thinking like a little longer term cup, okay? Some people call it a saucer. I don't care what you call it. And what you're now going to notice is, could there be a little handle where you could stick your finger in there and hold that cup? Now, I can hear it now. Yeah, but we got earnings. We got earnings. Well, is that bad? Could stocks break out ahead of those earnings? Sure. Could people be buying the stock now in anticipation of what those earnings could be? Well, yes, of course. We're talking about investing. Now, I want to also pull up the weekly chart on this. And if we pull up the weekly chart, there's been green candles, so many of those green candles that it's just been annoying. Well, if you're a bear. Now, if you look at this on the weekly chart, why is the color of the candles green on the weekly? Well, it's because the price is above both moving averages. The price is up, not near resistance. This is not resistance. That's an old high. A high and the resistance is not the same, okay? Now, notice one of the technical trends that we like to look for is, now listen, and I've always said this, if I was in a hospital, last dying breath, barely could say any words, I would literally say to someone, remember the 10-day moving average. That's how important that is, okay? The foundation for any trade that we do is the price above a 10-day exponential or a 10-day hold? If it's not going to be looking to be doing a bullish setup, okay? So the biggest thing is we're looking for stocks that have, why is that so important that you would say it in that context? It kind of sounds horrible. Well, no, sometimes you kind of, you wish you would have known things or someone imprinted in your mind something was really important. That doesn't guarantee it's going to go up that day. The next week, it could go down. It's just saying at that moment in time, there's momentum. And if you get bullish momentum, there could be a bullish trend. Okay? Now, what we're going to do in this case is we're going to go back to this chart, just kind of regular chart. So remember, we kind of said the 10-day exponential, the 10-day hold. Now remember, we're going to count to uno, dos, tres. And if we take a look at this, there's one. Okay, now that kind of started about 2 days ago. 2 was really on Friday. And what you're now going to notice is there's a crossover today. Uno, dos, tres. Now, here's the deal. How do we know it's going to go up? How do we know it's not going to go down the very next? It's only gone. Now, here's the deal. It kind of also comes back to, what do you want to do? Do you like to trade direction? Do you feel like you're good at it? Or do you say, James, I like kind of more being right. I'm willing to take less potentially. I want to have a defined risk. And I want to, for example, be in a situation where maybe it could pull back some and I could maybe still be okay. Now, that fits a lot of investors, okay? Now, what I'm going to do in this case is I'm going to go say, hey, could the midsection of this candle become a support level? We don't know if it's going to, okay? But we're saying, could it become a support level? Could maybe this area of 250 become a support level? What does that have to do with anything? Well, what we're going to look to go do is we're going to try to go sell a put spread. Now, the paper money account really has a call spread already down below, but don't look at that. We're going to come over here to the put side, and we're going to look to sell the 255. The 255 was the midsection of the big, large green candle. Okay? Now, what I'm going to also do is I'm going to go look at the strikes. Look at where kind of the open interest is. We got the 255 and we got the 250s. Okay, so I'm just going to highlight where we're kind of seeing a little open interest. There. It looks like every 5, okay? Now, if we said, well, could we look to do the 255, 245? Well, you got to ask yourself the question, if you did one contract of that, could you afford or be willing to risk about $800 to lose? Could you lose it? We got a $10 wide spread, a 251 credit, so that must mean that the risk per contract, $750. Could the paid money account lose $750? Yes or no? Okay. Now what we're going to do is we're going to go ahead and go confirm and send. Trade number 1, we're going to come in and we're going to sell, okay, on Apple, the 255. Now we're selling that. That's where we want the stock to stay above that strike. The purpose of the 245 is to actually create a max loss. And that's why there's a built-in maximum loss right there. Now, BJ says, I wish I would have learned that sooner. The greatest thing, I mean, in my situation, I'm just glad I started when I did. Okay? I do have some white hairs on the side of my head, but I think all of us will wish, and that's why I kind of said it like that. I don't want you to take so long to remember what we said about remember the 10-day moving average. Okay? Now, the thing with Brent and I that we do kind of have an unfair advantage to some degree is we not only learned ourselves, but we've also talked to and taught thousands. So we've kind of seen different things that on a basis that probably has a greater statistical chances of working, and things that haven't. So we've kind of like magnified the learning, so to say. Okay, so if I invested 20 years myself, but I've also kind of talked to a lot of other people, I've even learned even more than that. So now, you might say, I'm not in this situation. Well, let's learn from that, okay? Sooner than later. So what I'm going to do is trade number 1, we're going to send that. And now what I'm going to do is I'm going to put that just real quick in the other account. For some reason it's not letting me do that. I'll push it in the margin account, which should be fine. And now what I'm going to do is I'm going to send this order, okay? Right there. Now, yeah, so the comment is, hey, are we still on the Heikin-Ashi chart? So how would you know if you're on the Heikin-Ashi? When you actually see that these the stock is going up like this and there's one red candle and then we only go up, we go up again, that would really make us believe this is not Heikin-Ashi, okay? Because this should be just straight green. This right here, you get these 1 day down, 1 day down, 2 day down. This should be a straight just green pull. So I go back, Heikin-Ashi, notice you don't have any of those little red candles anymore, okay? So there. Okay, so on that chart, at least on the paid money count, we're not, okay? Now, any questions that you have? Okay, now I want to go back to something. So let's kind of write this down just real quick so we can follow along. I'm going to go back to what we kind of made mention of. Now, the example that we did was an Apple, okay, AAPL, short, put, vertical, okay? Now, the other one I'm just going to kind of make mention of. Now, on this account, we are still on Heikin-Ashi. And what I'm going to do is let me just pull up just UNH for just a second. Now, if I went back to, let's say, style, Heikin-Ashi candle, one of the charts that we're going to kind of keep an eye on, it's in the Dow, is UNH. That one is trying to get a little turn. It's not going to be a trade example right now, but that's something we're going to kind of keep an eye on, okay? The other one we're going to kind of also say, hey, could it be trying to bounce? We do have an example of this. Is Cisco is finally trying to get a little push. Shorter term, higher high. Okay, fine. That's in the Dow as well. But that's not really where I want to go right now. I want to go back to just real quick, one other stock, AMD. Okay? Now, whenever we look at really higher lows, it's a very simple concept, okay? No one taught me this, but I was like, hey, how can I see where the higher lows are? And you can tell where the higher lows are just by circling the red and green candles side by side. Okay, so you got 3 examples. But where's the higher low? Is it the red candle, the intraday low? Or is it more the open of the green candle? And it's the latter, okay? It's the open of the green candle. The open of the green candle. These become markers where bullish technicians are probably setting their stops underneath the open of the green candles. Because if we pop to the upside and we give it all back and close below that or trade below the open of the green candle, you're losing the bullish momentum. Now, let's say the investor said, James, I want to trade something a little bit more directional. A vertical strategy is not very directional. Let's say the investor said, James, what I want to do is I want to come in here and sell, okay? I want to come in and maybe sell a put by itself. And if you go look and kind of see where the open interest is, on the 240, on the 230. Now, let's say the investor said, James, I feel pretty confident. Now, does that mean they know it's going to go up? No. If they sell a strike closer to the current price level, they are saying, I don't mind to be assigned to buy the shares of the stock. I don't mind. Okay? Got to have the money. So the biggest actually thing is, let's say the investor says, look, I'm going to sell the 240, and what I'm going to do here is I'm going to buy a strike below me. Purpose? Well, that way, if the stock really went down, there is some right to sell it. Now, the other purpose of having the 220 put, which really is the that strike right there. Why? Well, that way, if the stock did not go up, there is some way to define the risk. The other purpose of selling a wider strike is to make the credit bigger, okay? So if we have an obligation to buy the shares at 240 and the credit is 822, then what's the max? What's the break even? The break even is at 231, okay? 231.78. Max profit is the credit. Max loss, spread, it's the spread, the 240, 220, less the credit. It's 1178. So the second trade that we're going to do here is we're going to do a wide short put vertical. You can think of it as a cash secured put, but it just has a built-in right to sell just in case. Okay? Now, a lot of people like the concept of actually doing cash secured puts, but they don't like to know that the stock could go to zero. You buy the put, you got to pay for it. It's going to reduce the credit. You reduce the credit, you make your break even higher. The other thing is, if you buy the put, you pay a commission. Okay, so there's some con to it, but you might say, hey, I evaluate the reward relative to the risk, and I just like always knowing that it can't go to zero. Okay, so second trade there. Now, what I'm also going to do is let's kind of flash through a couple stocks. One of the other names that we're going to kind of keep an eye on is Palantir. That's one that's kind of sticking up near that prior high, not falling apart. Some technicians will set an alert on that and say, hey, could that be trying to actually maybe get a push before earnings? CrowdStrike, same thing. Kind of building a base and then trying to reverse. Palantir and actually CrowdStrike, we're going to keep an eye on. Meta, speaking of communications. Now, if you take a look at Meta, it has earnings, let's say the 29th. Now, when sometimes people see stocks at brand new highs, man, it just goes against their grain, okay? I'm going to show the example of Meta. Meta is something that's kind of like fallen down, it's fallen down to an area of support and is trying to reverse. Now, option number one, the investor says, I'm not going to do anything until we get above, let's say, 738. Another investor says, look, I don't mind if it kind of goes back down a little bit. Just stay above 700, okay? Now, because there's earnings here, let's say the investor decides, okay, I'm going to sell a put strike that's a little lower. So on Meta, if I went back to, let's say, the 700, which strike is at 700? Why did you say the 700? Well, the 700 was where we think the support level is. Okay? So if we look at that 700-ish, we're going to go to the trade tab and we're going to sell the put where we think the stock could stay above that. Now, if we sell the 700 and then we buy the 695 or the 690, that is more of your classic put spread. Short put spread. And when we say a short put spread, we're really saying a credit. Now, if we take a look at this, if we just did a $5 wide spread, okay, well, now what you're going to see in this case is $1.72 credit, $5 wide vertical there, less a $1.72 credit. We can actually see what the max loss is, $3.28. Now, why am I bringing this trade up? Well, because one of the sectors that we actually saw, and by the way, if you enjoyed today's session, my gosh, click on the thumbs up, okay? I'm going to smash that thing myself, okay? Yeah, all you got to do here is just smash that thumbs up, okay? So right on your video, you can just click right at the bottom there, click on that thumbs up. Might as well, okay? Now, the reason why we're also kind of bringing this up is we've had a crossover on the sector. And you got to ask yourself, what are those stocks in the communication space? Now, I'm also going to go, can anyone name a stock that I'm missing? And I can't even believe this, that I haven't said it yet. If we said communications, like how do you communicate? You communicate with Google email, you communicate with Google Meet, okay? Things like that. One of the stocks that's in that area is Google, okay? Now, one of those stocks, what you're going to see is if you look at, let's say, GOOGL, that is kind of more your classic little continuation pattern. Little rundown, okay? Kind of little W's, right? Got above that. You're going to see that on Friday, look kind of a little bounce. Today, if we close, let's say, above today's high, on Google itself, it could really be close above the high of the low day earning, close above the high of the low day itself. The low day is Thursday. We're looking to see the red candle. And if we trade above that, trade above the high of the low day. If we close above that high, close above the high of the low day. When we say close, we're saying the last 90 minutes of the market. Now, the comment from Andy is, can you explain why you're not worried about earnings? Well, it's because we're trying to trade up into those earnings. The earnings can cause speculation, cause people to buy or sell that stock prior to the earnings. So you might decide 2 to 3 days before the earnings, I'm not gonna hold over the earnings, but you rode the trend in the shorter term till that point. Okay. All right. Now, I got to end it here. The one thing I'm going to also say is keep an eye on AMAT, keep an eye on Microsoft, keep an eye on TTWO, and also keep an eye on some of the financials. After last week, they had the earnings. They went down with some of the regional banks. Some of these stocks like Wells Fargo, WFC, MS Morgan Stanley, C-City, and B Bank of America, you're going to see that some of these are trying to make some higher lows here. Keep an eye on that, okay? Now, today, what we really kind of want to focus on is administration of the paid money portfolio after the expiration. We talked about the Netflix example. Then what we did is we did some trade examples, AMD, Apple, and so on. And also, if we had a little bit more time, the example of Google, okay? Now, remember with what we discussed here today, I want to kind of remind us, you could subscribe to our YouTube channel. And right on just on YouTube itself, which you can pull up on your phone, you can just search for Trader Talk Schwab Coaching Webcast, subscribe. It's free, okay? Second thing, for this class, what you're going to notice is there's a playlist for this class. And you could just think of this like a TV show where you bookmark the playlist, okay? And that way you can see all the prior classes that we did as well. Now, if you said, James, I have not followed you on X, you could simply go to just real quick, or you did not follow Brent on X. There's my handle right there. And for crying out loud, give Jax a thumbs up as well, or a little heart. My gosh, okay? And also want to give us a quick reminder if you said, hey, where do I find... Now, by the way, Jax is a very important part of the member of the team. I feel like, people don't understand that maybe as well as they should. But the biggest actually thing is if you said, where do I see a class schedule? Right here, I sent this in the link. You're going to see coming up next, we have a class from Cameron, trading cover calls and short puts. Quick notification here. that this week there is an advanced option strategies led by Ben Watson that begins tonight. And that'll be going all this week, Monday, Tuesday, Wednesday, okay, Thursday, and a Q&A session on Friday morning. So if you have not joined that, join it, okay? Now remember, with what we discussed here today, it was done for example, illustrative purposes only. Thanks to Brent and thanks to all of you as well. Stay tuned for Cameron May coming up next. And remember that with what we discussed, it was done for example, illustrative purposes only. We'll continue to follow on some of these themes throughout the week. And with that said, thanks so much. Take care. Bye-bye.